Hello everyone and welcome to this last video before the big shareholder meeting. And as you all know, a lot is at stake. We are voting for Elon's pay package and for the relocation to Texas. So in this video, I'm going to make it very fast and quick, but we are talking about 4 things. Number 1, high stakes. Why is this so important? What's going to happen on Thursday? Second, what are the exact stock scenarios based on the outcomes? And number 3, most importantly, my stock prediction, my vote prediction model that tells you how I quantify the probabilities that this is actually going to happen. And there are some surprises here that change my predictions. And then finally, how do we prepare for Thursday? So let's get right into it. Number 1, why are the stakes so high? You know that I believe, based on FSD coming, Optimus coming, and EVs turning around and margins turning around this year, Tesla is probably the greatest opportunity in the stock market right now. And there is a huge overhang on Tesla stock that suppresses the stock price right now, in my opinion. My personal price target midterm is 5,000. Other people say 2,000. Whatever it is, it's a multiple of what it is now. And Tesla can be the biggest stock in the world in the next 36 months if this all goes right. There's one big risk here. The only foundational and fundamental risk to Tesla is that Elon doesn't play along. That is why this pay package is all decisive. The scenarios, we all know the scenarios. What happens on Thursday? Either we say we get lucky and both votes are yes, Texas relocation that gets us out of the social justice nightmare of Delaware, away from that crazy court and this new judge that clearly has it out on Elon, which is very dangerous for Tesla. And she clearly, thinks nothing about shareholder contracts. So getting to Texas would be very, very good. And that would be the ultimate solution here. And number 2, the actual vote on the compensation package. Now, if they both go through, I think there's an enormous opportunity to the upside, even short term, because there's so much overhang. There's now so much shorting going on. Lots of people actually bought in the money puts to secure the downside of their portfolios. If that goes through and they have to basically sell the puts, or they will sell the puts, then the other side is going to short cover. They're selling shorts against these puts, the people who sell the puts. And so this can create a lot of upward pressure on the stock. I'm not saying it's going to happen in every case here, but it could happen. So there's a lot of pent up, upside. But of course, it all requires that Elon stays here and everyone is happy. So it's a pretty dramatic situation. On the other side, if this fails to go through, if Elon's pay package gets rejected, I think there is major, major, major downside. I think way more than people believe. I think we could see Tesla below 100 in the short term, in the most extreme case, if this fails. Because even if you think it's not a big deal, it gets rejected, we try again. We have to understand the world is moving fast. Elon is moving fast. And Elon doesn't have time to be in limbo for years, right? Oh, will he control Tesla or not? Can he put all the Optimus and AI technologies into Tesla, or should he do it outside Tesla? I take this extremely seriously because I always think, what would I do in his shoes? If I was in his shoes and I couldn't rely on this company being actually under my control, why would I generate all that new value for Optimus and AI in Tesla? Of course I wouldn't. On the other side, if I control a sufficient amount of the company, it's much more efficient to stick with Tesla with this huge capital machine in there, and so on and so forth. So I think the downside is much more massive than people understand. If these votes are no votes, especially the comp package. And second, the upside is also vastly underrated, even in the short term. Okay, what does it all mean? And what can we bet on here? So I want to go through a quantitative model that I developed. And that model should help us to understand a little bit better what the actual probabilities are that all of this is going to happen or not going to happen. So here's how I approach this model. On the left side, you see 2018. This is what we know happened in the past. Now, let's start from the beginning. Retail investors roughly held 29% or 30% of Tesla shares, and 70% were institutionally held. We know that 29% of retail voted back then, and that 80% of institutions voted. We also know that the total yes votes on the comp package in 2018 were 73%. And from that, we also know, or we know that currently the current retail vote is 90% yes. And I think we can conclude back in 2018, that's just an assumption, by the way. I will mark my assumptions here. These are assumptions. So I assume 90%. And if 90% of retail voted, we automatically get that number. It has to have been 70% of institutionals who voted actually yes to get to this number. Okay. So this is roughly the scenario. Only one assumption, 90% of retail voted yes, which I think is very likely because as retail investors, why would you even vote in 2018? No one paid attention. If you vote, you probably like Elon and you vote yes. Okay. That's what we know. Now let's look at, much more importantly, what happens in 2024. Now, well, number one, there's a shift, 44% retail and 56% institutional. So there is a big shift towards retail. And if you don't agree with these numbers, these are all approximations based on all kinds of things from Tesla Boomer Mama, Alexandra Mertz, and all kinds of, and the Wall Street Journal. I put these numbers together. You can, create your own assumptions. But there is a shift here. Now, I will go through these things. Let's assume 80% of institutional investors again will vote, right? And for now, let's just assume, we know that 90% of retail shareholders voted yes so far. Elon said that, right? He tweeted this on Sunday or Saturday, right? We can also assume they also voted yes on Texas. I think they voted, yes on both. We then also know, or we can assume, for the institutional investors, let's assume they're sticking to their 70% yes vote. We can model this out in a second. So what we are basically seeing here is that the total yes votes are at 74% under these assumptions. And these assumptions, there are two variables in here. I will get to Texas in a second, but these are the two big assumptions here. The 29% of retail investors will vote. I think that is underestimating the amount of retail investors who vote. That is just based on last year, on 2018. Based on the crazy thing that's happening, I think we can easily assume that this number is much higher. Let's say 50% actually vote. Boom. What happens now? Actually, the comp vote goes up to 77%. Okay. I think this is too high. I think the institutional investors, for many reasons, might underperform here, even though the board has a special push on convincing them. So I don't think 70% is a crazy assumption. But I think 50% of retail investors actually voting is a pretty safe assumption. So if that's the case, I want to stress test this model now. What's the percentage of institutional investors who actually have to vote no to the comp package to get us under 50%, right? If I type in 35%, we are still at 53%. So I have to type in 30%, I have to type in 29% to actually get under 50. Okay, so if these assumptions are true, and I think we can, be sure they are, 29% of institutional investors have to vote no, and 71% have to vote 29% have to vote yes, and 71% have to vote no. That is crazy because it would mean that over 50% of the institutional investors who used to vote yes in 2018 have to vote no now and change their minds. I do not think that this is in any way realistic, given the fact that there's a huge push to make them vote yes. So this number is way too low. I do not believe this is possible. And that means, if I had to make a bet, I think 70% staying exactly where it was in 2018. Some get cold feet and vote no now, but some others actually get pushed by the board into voting yes. I would say most realistically, this stays the same. So we have an enormous buffer, a much bigger buffer than I thought. That makes me very, very bullish at this point that Elon's comp will get a yes vote. I'm not saying 77%, but getting that to, 29% of institutional yes, I don't think that's going to happen. So, good news. I'm much more confident now that the vote will be yes on Elon's comp. Now, surprise. I also changed my mind on Texas. Well, I didn't change my mind here. I thought it goes through, but now I'm much more confident. On Texas, here's a whole different situation. I thought more about Texas. I think Texas will also go through. And here's why. In order to not get through, right, we would need basically 68%, probably 67% of institutionals have to vote against Texas. Now, I think that's very unlikely, and I think institutional investors will actually vote 90% or something for Texas. Here's why. Institutional investors, they are not always the sharpest tools in the shack, and they're not paying attention to these things, right? What do they care? They are all money managers, administrators. They're not even getting what's going on. So there are two types of institutional investors. Number one, people who actually pay attention because they're, they have to generate alpha, they're active managers. If you invested in Tesla as one of these investors, you will follow board recommendations and Elon's recommendations because you believe in this whole thing. So you're going to vote like retail. The people who don't vote like them necessarily are these people who don't give a shit, right? They don't care. So these are people like Vanguard or this Norwegian sovereign wealth fund or CalPERS, like people who have no clue, they're not paying attention, they're tool administrators, and they vote the convenient vote. And what is the convenient vote? On taxes following board recommendations. Now that's different from comp, because in comp, you have all these very bad people like Glass Lewis and ISS who make very aggressive no recommendations, but no one makes any aggressive no recommendation on taxes because it's not part of their whole framework of thinking. They just ignore it and say, whatever, vote with the board. Only on comp, they're getting so aggressive. So many more institutional investors, I'm very sure about that, will vote for taxes than will vote for the comp vote because comp is more contested. And so that means Texas actually has a much better chance of passing than I thought, because when you sum all of that up, right, we're not that far off here, actually. You see, if only 29% of retail would vote, we're getting closer to 50%. But even then, which is very unlikely, even then we get over 50% because there are not too many people who have a reason to actually vote against Texas. That's basically my take on the whole model. I hope that was helpful. And that helps you to assess a little bit more the numbers. When we take a step back and think about it, there are not many reasons to believe. It's very hard to see a scenario at this point that Elon's comp vote gets voted down. It would require a lot of institutional investors, many, many more institutional investors than in 2018 to vote against it. And the question is, why would they do that if they voted yes in 2018? We haven't heard from many who changed their vote. We have heard from many who stick with their no vote, but that doesn't change these numbers. So I think it becomes increasingly unlikely, very unlikely this goes down. And I will put the Texas yes probability from previously 10% to probably 60%, which would be the ultimate victory. Okay, how do we prepare now for Thursday? What do we do with these numbers? Well, as I said, there is a long tail risk. There's a small risk that this actually fails for whatever reason, even though I think it's incredibly unlikely. But if it happens, you have call options that expire this year or something, you will lose all your money. If this goes south, the comp vote goes no, the probability that you will lose all your money if you have any out of the money calls is very high. I would say 95%. That's your risk. But the probability that this happens is very low. So if you have stocks, I wouldn't be too concerned at this point. I think even if there's a no vote and the stock drops to 100, you are likely going to see 200 again by end of the year because of FSD and all kinds of things. But if there's a no vote, it will suppress the stock dramatically, right? I would reduce my price target, my short-term price target from 400 to 200 if this goes south. In my long-term, I think you can forget Optimus and AI. I think this is not going to happen if this goes south for many reasons. But I think we will get 2 yes votes. And if this happens, I see an 80% chance of a 10% up move and a 50% chance of a 20% up move very short term after Thursday. So you can make up your mind. It's your investments. Be cautious. I'm very bullish and all in on Tesla. I think this will be a double yes vote. I'm very optimistic about the comp vote at this point. I'm pretty optimistic also about Texas. Let's see if I'm right. Let's see you on the other side.